Welcome, everyone. I'm Alice Neumann, America's Head of Corporate Bank and Global Head of Strategic Corporate Lending here at Deutsche Bank. It's a pleasure to welcome all of you at the Deutsche Bank Center, our fabulous new U.S. headquarters, and it's an honor to host today's FinTech Innovation Labs Demo Day. We, along with Accenture and the Partnership Fund of New York City, are so excited to bring the FinTech community back together in person in New York City. And I've been talking to a couple of you, and it's just so special after those 2 years and being in this space to really be in person, to be able to chat and just connect, which is, even though it's a tech conference, right? Being in person is just doesn't get better than that. Looking at this year's participants, they were selected from nearly 200 applicants globally and are focused on some of the industry's most important issues, including creating sustainable investments and meeting ESG outcomes, improving transparency around cryptocurrencies, and managing security and compliance risks. Their solutions use technologies such as artificial intelligence, machine learning, cloud, blockchain, and advanced data analytics. Deutsche Bank is proud to be part of the lab, not just in supporting and mentoring these startups, but also playing an active role in funding some of the companies as they reach a later stage through our corporate venture capital program. For example, Skyhive from the class of 2020, a cloud-based workforce management and reskilling software provider, is the latest addition to our corporate venture capital portfolio. We continue to be on the lookout for further investments and further solutions that we can reimagine banking along with you. Over the past 12 weeks, executives from over 40 financial institutions have mentored the startups, helping to shape their product and identify use cases. We're excited to hear from this year's cohort and see the next emerging technologies today. And I've been told that they have 4 minutes, right, to present themselves, so I'm going to keep my comments short as well, short and sweet, and I'll turn over to Maria Gotch, the President and CEO of the Partnership Fund of New York City. Thank you.
Good morning. So, Alice, thank you, and to you, Christiana Riley, Gil Perez, Vijay Bandari, and all your colleagues for hosting us today in your beautiful new space right here in Columbus Circle and near Central Park. So you guys have been terrific partners. We're one of the original founding 10 institutions, and we appreciate all your support. So as many of you remember, the last time that we met in person for Demo Day was 2019. And so much has happened in the interim. I'm not going to give us a history lesson because we like to move forward to the future. And in light of that, we are especially grateful to all of our partners for your continued and unwavering support during the last 3 years when we had to do a lot of this virtually. Because most of what makes the lab unique and special really continued without interruption, thanks to all of you. So the access to the senior executives at our bank and insurance partners, they continue to help the companies understand what large institutions actually need and why they will buy it. The entrepreneur mentors who shared their experience of how do you scale a company, how do you build a management team, how do you build sales, that continued. Venture capitalists who continued, granted it was a frothy environment, but continued to spend time explaining what does it take for them to open their checkbook and make an investment to help build that company. And then lastly, but not least, to our execs in residence who spent time on a wide variety of specific domain expertise, how to navigate regulatory environment, how to attract top tech talent, and how to really understand the complexities of a large financial institution, particularly their tech area. The alums of the lab were also very busy during the last couple of years. Collectively, they raised $1 billion since 2019. And that really speaks, I think, to the maturity of the program and the companies. So as of today, the total dollars raised by FinTech alums is $2.2 billion. And this is across a very broad portfolio, not just one company. And our graduates have been successful at fundraising because they have been successful at partnering with many of you in the room. And their success can be tied to many of the people in the room who've helped them understand how to sell and how to be successful in as a FinTech company. So thanks really again to all of you who have given so generously of your time and expertise. You have day jobs. It's been a very busy couple of years, but thank you again for sticking with us and helping us get through the challenging last 2 years and coming out the other side, we hope. And so now to the main event, this year's class. You'll see it's a very diverse group. I was talking to people in the coffee room. We've got people who are going on to raise a Series C, and we've got people who haven't raised any money. And I think that really speaks to the interest in the innovation that's coming up from the entrepreneurial community. So after we've spent 3 months with them, and we think they're all terrific and have great potential. And hopefully after today, you will agree with us, and you're going to want to spend some time with them. Already, the 10 companies have nearly 30 pilots underway at their financial institutions. And as we all know, that's really the first step to hopefully a longer relationship. And from our perspective in particular, very exciting, a number of them are moving their headquarters to New York City or setting up an office here. So that's one of our, as you know, one of our goals is to make New York City a center for FinTech. So we're always happy when they decide to do that. So we hope that after hearing their pitches, you're going to be excited to follow up with them and their talented management teams. And now let me turn things over to David Treat, who is with Accenture and who, with the rest of his team, has been a terrific partner since inception. David?
Pre-COVID, COVID. It's been tough on everyone, but I want to extend the thank you that Maria offered. Thank you, Deutsche Bank, for hosting us. Thanks to all of our FinTech participants in the class this year. You did a fantastic job. Can't wait to have you run through your pitches and see how it's evolved from beginning to end. It's always one of my favorite days. I want to just reiterate the thank you to the financial institution partners, the VCs, the executives in residence. As Maria said, this only works with you, and we are entirely just deeply grateful for your collaboration and your partnership. I took on a new role at Accenture actually just before the program started, leading our metaverse business, which brings together blockchain and extended reality and cloud and IoT and edge and security. And from just a deeply privileged position now with all of our client work, the relevance of this year's class and the different facets that it's bringing to that domain, I'm just incredibly encouraged as to what's about to happen next. I think we made a bold statement in our tech innovation trends report that we released this year of every business is going to be a metaverse business, and that the next wave of digital, the digital world that we're building is going to be massively transformational. The program, the FinTech Innovation Lab program's ability to bring together that access to where the innovation and the startup energy is emanating from is just fantastic. And so really looking forward to not just where how this year's class is going to contribute to that frontier, but where we head next together and what happens once you all become alumni. One of the things I want to do, so everyone hopefully picked up the card. One of the things that is a really important part of the program is the amplification of the energy and the engagement. Obviously, with the range of institutions we have here, it's natural and the excitement is there. But please, on the inside cover, we have both social handles. Please tweet out or post as you can. The success of the day, your insights, your favorite points of engagement, what you've heard, that amplification really makes a big deal and has a big impact for the whole program and for our startups' success going forward. So please do that. I would now love to welcome. Let's kick it off. Excuse me. I'm going to turn it over to Neil Zane from Bank of America to introduce Rails, our very first startup. So.
In 2 years, you got my name right. I mean, it's not a complicated name. I appreciate that. You're a banker, and you need to figure out the finances of your small business client. It takes you 2 weeks to access, to cleanse, and to understand all of that data. Now, however, you have Rails. What took you that 2 weeks now takes you 2 minutes. Connect to any accounting software in a few clicks. You'll have a visual summary of your client's finances at your fingertips including cash flow forecasting. And 71% of small businesses want that. So right now, during that time, you can serve more clients because you have that free time. And that adds to your bank's market share. So it's my pleasure to introduce Zohaib Sahad, the CEO. He's going to tell you more.
Good morning, everyone. Thank you, Neil, for the introduction. You've made my work really easy. My name is Zohaib. I'm the co-founder, CEO of Rails. Small businesses are demanding more from their financial institutions. Beyond just slick UI, they want to understand their own business with the data set that they own. They want to understand insights from the cash flow forecasting, better management, budgeting tools, and more so, they want a faster, easier access to capital. That's why we built Rails, largest financial data network. We have made it really easy for the banks to get access to financial data on small businesses across banking, accounting, tax, as well as commerce data. So it's a single access point for the bank to get access. Now, we also make it really easy for the SMEs to log in and grant that access. It's as easy as logging into a Facebook account, something they're used to on a daily basis. It's super easy to give your username and password in the window that we provide, authenticate, and you're connected to Rails, and we can start pulling the data on behalf of the bank. Now, we also understand that with a lot of data sources and more than 30 million businesses, the data coming in is messy. So we build normalization and standardization engine. So our banking partners don't have to process any data coming in. It's a universal data model, out-of-the-box experience. This is our secret sauce to make data really easy to work with. On a very robust data model, we're able to create financial insights and analytics on a small business. Think of this as a report card on your small business. This includes insights and analytics on cash flow forecasting, financial statements, risk, strength, or weakness of the business. Bankers can respond to liquidity or growth needs of a small business with the insights provided by Rails. We also went ahead and created a better credit score on small businesses. It's really hard to understand the risk profile of a business which is sub 50 million in ARR. We're particularly excited about this initiative as well. We're working with some of the largest banking cores, banks, as well as emerging startups. We have more than 150 customers using our platform today. We are working with some of the best investors in the industry that spread across the globe. Please come and talk to me on our booth. I'm more than happy to answer any questions. Thank you.
Good morning. I'm Chris Langle with AllianceBernstein. Customer expectations around business interactions are greater than ever, and instant messaging has become a common form of communication in the business world. But these casual communication channels, paired with the hybrid work experience, blur the line between personal and business communication and often pose major regulatory and security challenges. At AB, we have not historically been able to communicate with our customers on many of these messaging platforms due to compliance reasons. That's where LeapXpert comes in. Dima and his team have developed a platform that enables organizations like ours to securely communicate with our clients wherever they are on the world's most popular instant messaging applications while integrated into our business-critical processes and systems. We've enjoyed working with them during the lab and are pursuing several use cases for expanding compliant communication both here in the US as well as Asia. With that, it's my pleasure to introduce Dima and LeapXpert.
Hello, my name is Dima Goodside. I'm founder and CEO of LeapXpert. We are all about responsible business communication. The question we're asking ourselves and you're, how do you message with your clients? And let's unpack that. The way we communicate with clients has profoundly changed. It used to be telephony, everything was simple. Then email came, and now it's about mobile messaging. 6 billion people using messengers every month. It's estimated that around 20% of such conversations that are somehow work-related. Now, the enterprise applicability of all those channels is nowhere to be found, which leads to big gaps. And the gaps in our forum here is data ownership and compliance. Financial institutions who fail to acknowledge this question properly are facing increasing regulatory enforcement all around the world. Only a few months ago, JP Morgan paid $200 million fine just for this, just for the fact that few brokers used WhatsApp for their work. It's not about what they said, it's about which channels they used. In LeapXpert, we could see this problem coming years ago, and we've been working hard to create a solution. And the solution is a centralized communication platform that finally allows company employees of any role to communicate with any client over any channel in a proper way. And it works for both parties. It works for clients because clients don't need to change behavior. Keep using your messengers. Everything is good. Company employees, we give many different options. They can use the messengers. They can use our applications, or they can even use existing enterprise messengers, such as Microsoft Teams and Slack. From all those tools that they can communicate with all the clients in a proper way. We are a platform that sits in the middle. We connect all the parties, and we are capturing the data. The data we are capturing is being used in all different integrations we're enabling on top of communication. Type of integrations is CRM platforms, data leakage prevention, ethical walls, information barriers, and of course, archiving. Architecture behind the platform is very modern and extremely scalable. We have deployments from a few hundreds of seats to a few tens of thousands of seats. The way we connect to all different messengers is by only utilizing official APIs, where it means that all our integrations are well above the waterline, what it means to you that your communication will be scalable and reliable. We believe in open architecture, so in addition to all different tools we provide, we expose APIs for our partners and our customers to extend the use cases for their specific vertical. Here you can see an example of our platform in action. On the left, you can see company employee using our applications. On the right, you can see client using WhatsApp. And what we chose to present here is much more than simple communication. Here you can see an example of a trade execution confirmation flow over WhatsApp. Everything in a compliant manner. Now, why we do is complex, right? To do communication is complex in general. But in order for us to achieve where we are, we had to integrate with at least 10 different communication channels, at least 5 different enterprise collaboration platforms, many other players in the ecosystem, and our core technology is protected by at least 5 IPs in different geographies. Our growth, so many tier 1 global institutions already using us, and many more are joining every month, and people who believe in our mission. Types of banking we're addressing are investment banking, commercial banking, wealth management, private equity, and much, much more. Not only we operate in financial institutions, we also help other verticals, such as law firms. Bless you. So all of this would not be possible without a team behind the product. So the company was co-founded by 3 amazing people. I'm not one of them, but the others are amazing. And we are blessed to have around 100 people spread around the globe. We are headquartered in New York. And one last statement. So this program was super amazing for us. We were born in Asia, and on the back of the program, we moved our headquarters to New York. So the people behind the program make us feel like home in our new home. Thank you very much, and come and listen more at our booth. Thank you.
Good morning. My name is Nikki Kwame from Morgan Stanley, and I'm really proud and pleased to introduce SolarFinds. A few years ago, Travis Holloway was a financial advisor to high net worth individuals Whilst the services he provided was valuable, including access to capital and lending solutions, he quickly realized that there was an extreme lack of resources for the everyday American living paycheck to paycheck. For the everyday American, there is an extreme lack of resources for loans under $1,000. This means you have to resort to family and friends, which is extremely stressful on personal relationships and also, frankly, embarrassing to ask for. So Travis decided to team up with a friend and solve this problem by building a mobile lending exchange where individuals can sign up as lenders or borrowers to fund or borrow loans up to $1,000 with no interest rate attached. In the last 4 years, Solo Funds has funded over 400,000 loans on the platform and continues to grow. Today, it is 2022's Forbes FinTech 50 company, the 2022 Visa Everywhere Initiative winner, and is the only Black-led FinTech certified B Corp, to name a few. But to hear it from the founder himself, ladies and gentlemen, please welcome Travis Holloway.
Thank you. Thank you, Nikki. Greatly appreciate it. My name is Travis Holloway. I'm the co-founder and CEO of Solo Funds. Solo is a Fast Company's most promising idea award recipient, as well as the most recent winner of the Visa Everywhere initiative. We've had a few really big years. We've been on an incredible growth trajectory. As of last month, we were on a 33 million annualized revenue run rate and a 204 million annualized transaction volume run rate. We've accomplished all of this with a marketplace customer acquisition cost under $9. So we've grown incredibly capital efficiently. We've grown faster than a number of FinTech unicorns, and we've done that at a fraction of the capital that these businesses have raised, as well as what they've spent. Which means we're incredibly resilient because we've never had the benefit of being well capitalized, but we're scrappy and we're resourceful, and we're built for the tough times that we find ourselves in today. Solo is a two-sided marketplace. On one side, 198 million everyday Americans are living paycheck to paycheck. These individuals need access to capital, and in order to get that capital, they're largely either selling personal assets or borrowing from someone else. These individuals are plagued by a lack of equitable resources to get the cash that they need. On the flip side, you have 56 million Americans who are actively searching for yield. These individuals are not attractive to traditional investment advisors and investment banks because they're deemed as not having enough assets to manage. They've been largely failed by do-it-yourself investment trading platforms because they lack experience with the asset classes, and they don't necessarily understand how to make informed decisions because they lack the tools and overall resources. Solo provides access to capital for loans between $50 and $500 currently. We empower borrowers to create their own loan terms, meaning that they select how much money they need, what they need it for, when they can pay it back, and if they're willing to pay anything in addition to the principal amount. We've created an equitable solution to access to capital that provides people with more dignity and autonomy than ever before. We're able to accomplish this because we've created our own proprietary underwriting model, which we call the Solo Score, which is performing 3 to 4 times better than industry average. What we're most excited about here at Solo is the impact that we're having. We're matching loans amongst complete strangers in 15 minutes. That's the equivalent of your car being broken down on the side of the road, and before the tow truck arrives, some stranger is giving you the money to get your car fixed. That's magic. What we're really excited about is the fact that we're servicing what we call the hustle economy. These individuals who are seeking capital may be social workers, they're teachers, they're teaching our kids Monday through Friday, but on the weekend, they're delivering your Postmates and they're driving Uber. The people providing capital on our platform are individuals who may be welders, they may be electricians, they're gainfully employed, but they're not attractive to the investment advisors that, work at many of the institutions that you all work at. We're the only certified B Corp that's a FinTech and Black-led in both the United States and Canada. When we went through that process, what we realized is that 82% of our lending members actually live in the same communities as our borrowing members, which are underserved zip codes. So not only have we distributed $63 million of capital to our communities via loans, we've actually redistributed $7 million of returns and profit back into those same communities. We're incredibly excited about that. So the real opportunity is to right bank this group. We've established an unparalleled level of trust and loyalty with our members, and we will partner with banking solutions providers to help make lending and borrowing on our platform even more efficient. We have roughly 600,000 registered users today, and we've processed over 400,000 actual loans. We did $7.6 million of revenue last year, and we are ahead of forecast to do $40 million of revenue this year. We will continue this growth trajectory, hopefully by partnering with some of the larger financial institutions in this room to provide more traditional financial products to our members and create a path to upward financial mobility. Solo was founded by two best friends. My co-founder Rodney and I shared the pain point of friends and family who would ask us for small dollar loans. My background's in finance, where I spent 8 years as an advisor at Northwestern Mutual, and my co-founder Rodney started his career at Procter & Gamble as a brand manager, and then as a founder of a company called Listener, which went on to be a CNBC Top 50 disruptor 4 times. We've attracted an incredible group of talent from some of the largest financial institutions and some of the fastest growing startups in the country. Solo is on a mission to leverage the power of community to build financial autonomy for all. We sincerely hope that you'll join us on this journey. Happy to discuss more after this. Thank you for your time.
Good morning, everyone. It's wonderful to have everyone back at Deutsche Bank and meet in person. So I hope this is the official end of COVID and we won't have to regret not wearing masks going forward. Deutsche Bank has been a founding member of the Partnership Fund for, right from the start. And as part of this program, it's been 4 years now for me. And over these 4 years, we've mentored many young startups. But Straylight holds the distinction of being the youngest startup that we have ever mentored, which means I see tremendous potential in Straylight. With Maxwell and Sergio at the helm, 2 seasoned professionals and serial entrepreneurs, they're working to push the limits of data and intelligent automation. They're doing some exciting work connecting and discovering data relationships intelligently using machine learning, and making it available to consumers via an NLP layer that works at the human level to automate data discovery and delivery. With that, I'd like to hand it over to Sergio. It's been a pleasure having you with us for the past 12 weeks.
Thank you.
Hello, everyone. Thank you for making it today to Deutsche Bank. Thank you, Vijay, for the introduction. And of course, thank you to the rest of the Deutsche Bank team for hosting us today. Straylight is a New York-based team, actually just having started in November. To that point about us being a very, very young team. We just formally got started in November. We come from government, including a former Federal Reserve regulator, as well as banking and FinTech, working especially in machine learning and artificial intelligence. If you remember one thing from this entire presentation, let it be this: integrate, then automate, in that order. What we do is we provide an AI-first, outcome-driven platform that allows for intelligent integration and discovery of data, and then from that, we enable downstream intelligent process automation, including automated reporting, automated data quality checks, and other types of use cases across compliance, KYC, and customer analytics. The problem as we see it essentially goes like this. Poor data access, as in siloed, fragmented data, is wasting thousands of hours and millions of dollars every year. The way that this typically plays out is that data is spread across many different systems, often with something as simple as a first name being represented in a dozen different ways. And so any consumer of these data sources who might want to use it for analysis, for automation, typically they end up bugging some poor data engineer who then writes perhaps some code to transform the data, to normalize it, and so on. But that code then is brittle and will almost certainly break as soon as the underlying data changes. Furthermore, this entire problem blocks effective use of advanced machine learning and intelligent process automation. Our solution is literally to have an AI system automate as many of those data engineer tasks as possible, including generating the interim code to load and transform data to the correct formats and structure, as well as real-time validation and labeling and classification. What this does is it immediately frees up months of time and saves millions of dollars while also unblocking that roadblock that kept you from getting to machine learning and intelligent process automation. From that, we can effectively automate a wide variety of downstream tasks, including regulatory reporting, customer analytics, and service all of that behind a single virtual API. So how does all this work? In a nutshell, a user simply says what they want the output to be. They provide a schema or a spec in a simple, natural language-driven framework, and then our system extracts and analyzes that and produces the artifacts and automations that they're looking for. If you keep in mind one thing, let it be integrate, then automate. I hope you come see us at our booth. Thank you.
Hi, good morning. My name is Tricia Pretty Paul. I'm from the Travelers Companies. Over the last few years, insurance companies have become heavily reliant on data. The inundation of data made it much harder to find the good data or the golden middle of useful data that can be used in decision making. This is where Draven comes in. They realized that carriers had a data gap. With proliferation of data and all the different formats, it's hard to extract insights for underwriting. Draven is focused on large fleets where it can be difficult to track all individual vehicles with an option to grow in other areas. Their telematics platform will provide the analytics tools for carriers so that they don't have to invest in technology to constantly keep up with the trucking telematics adoption. During the lab, we had the pleasure of working with Zahar and Alex, and they gathered key learnings from our underwriting, innovation, technology, and telematics teams. Draven was very flexible in meeting with us, despite not being able to meet in person, and you will see that today. They had to endure awful hours as well because we had a huge time difference. Yet their openness and ability to take feedback was critical to building a great connection. They applied the insights received during these conversations and were able to refine how their service works. By providing a service that has data integrity and analytics, Draven will ultimately save carriers time and money. So let's welcome Zahar and Alex and tell you more.
Hi, I'm Alex and I'm CEO at Draven. And at Draven, we acquire, harmonize, and analyze telematics data on a scale, regardless of its type and origin, and convert this data into analytics and tools to improve operations of commercial auto insurance companies. And the main problem we are solving is unprofitability of fleet insurance that has been followed by higher losses for more than a decade. That's because of flexible underwriting models which do not take into account real-time data. The lack of this data itself, I mean information about fleets, vehicles, how, where, in which conditions they operated, and finally, labor-intensive and manual operations. So to solve these issues and to make fleets data accessible and scalable for insurance, we gathered a team with a full cycle of expertise in startups, telematics, and insurance, and started Driven. And Driven is an open mobility platform for telematics and automotive data acquisition, harmonization, and analytics. And the beauty of Driven is that we do not create new data. We reuse existing one, which is currently used for fleet management purposes, and make it applicable and affordable for insurance. We are agnostic to any data type, be that information from aftermarket telematics, OEM embedded, or devices and mobile apps of any kind. It means that via single integration with Driven, you will cover any fleet with any telematics. And we do not sell fleet management or insurance to fleets. We are a tech enabler for insurance companies, which brings holistic approach to automotive data and a variety of tools to improve operations. And even with our entry product, fleet insurance companies can onboard their fleets automatically, get visibility of the whole portfolio on a vehicle level, and see fleet's turnover rate. This way they can collect premium faster, put capital at work, and increase their revenues. Driven brings easy access to the fleet's real-time data and improves the way insurance companies manage risk. And it also reduces the cost of operation, starting with digital fleets onboarding and ending up with accident detection and reconstruction. And the crucial thing, that Driven starts bringing benefits from the first month. We have started 2 pilots in the US and have several more upcoming. Plus, there is a deal with leading automotive group with 2 million vehicles in portfolio. And it looks like even more yet to come, as the topic is clearly picking up across multiple markets and niches, which also use IoT data, such as cargo, property, and workforce insurance. And to learn more about Driven, please drop us a line. Thank you.
Hi, my name is Gerald Ledun, and I'm from UBS, and I'm responsible for building field platforms for our field. And I've had the pleasure of mentoring JC Hertz from Ion Channel, and I think you'll both be impressed by her amazing energy and her 20 years experience in building scalable compute systems. When I first looked at Ion Channel, I think what I was most impressed by was, when I develop software, most of it's web-based, microservices, et cetera. And before we release, we always do a penetration test to make sure we don't have a risk that we're going to put the institution through. What Ion Channel does is it looks at the risk from internal, from your open source chain and from your vendors that are using open source. So here's an ability to see risks that you weren't aware of before to make sure your institution is safe. And I think it also has the ability to use a GUI or APIs. You can put it right into your build chain, the same way you do sonar reports. So with no further ado, let me introduce JC Hertz.
Software supply chain has become a chronic migraine, from Log4j to destructive protestware to vendors whose hidden levels of technical debt leave customers exposed and paralyzed. The solutions market is obsessed with this magical thinking that if only we give developers good enough tools, they will proactively secure and maintain their code. But here's the problem. Developers don't own the risk, and they don't want to maintain their code. These guys and gals get paid for velocity. They have described software maintenance as soul-crushing work. But this soul-crushing work is what keeps your enterprise from getting owned. So Ion Channel's platform is about giving visibility and positive control to the people who own the risk, the customer, so that you can set some thresholds for quality and enforce terms and conditions for security responsiveness from your vendors, contractors, partners, and internal development teams. Now, when you look at software supply chain risk, it comes from 2 places. It comes from the code, which could be compromised, brittle, or malignant. But it also comes from the supplier, because software is like Soylent Green. It's made of people. And those people include thousands of open source developers with poor cyber hygiene, risky affiliations, and a raging case of I'm bored, don't care, not working on this. Your endpoint detectors don't tell you anything about that, but it's a huge leading indicator of risk. So what Ion Channel allows the software customer to do is to manage quality and risk on a continuous basis without actually being a software engineer or using developer tools to have visibility and quality control on their third parties. The platform analyzes about 1.5 trillion events in the software supply chain to detect leading indicators of risk well in advance of known vulnerabilities so that your enterprise can escape the whack-a-mole hell of CVE remediation. It both generates and imports software bills of materials with the power to resolve low-quality legacy software lists. Yes, those gnarly spreadsheets filled with inaccurate and incomplete package names into an authoritative software inventory that can be risk managed on a continuous basis. Our API-driven workflow is designed to integrate with a wide range of enterprise use cases, from DevOps to security operations and configuration management, and to scale with the technical maturity of the customer, from the most basic use cases to the most sophisticated tiger teams. Our team has decades of experience building high-scale systems in regulated industries, from financial services and e-commerce to national security and healthcare. And our board includes veterans of the financial services industries who bring a wealth of perspective on the priorities of financial institutions and their regulators. We hope to work with you to make your software supply chain more secure and resilient. Thank you.
Good morning. My name is Anindya Sengupta. I'm from Prudential. I lead our emerging tech strategy and operations. And I'm very happy to introduce CoverForce. So insurance is a century-old business, and it's still highly fragmented, especially the experience between the agents and brokers, and that's where CoverForce comes in. CoverForce partners with carriers to build up their API, distribution API. They also build up customized solutions for the agency networks. CoverForce started their journey in the commercial insurance, but I think what they're building up has a high significance in our life insurance too. While we mentored them for the last 12 weeks, we found they have a very strong team with, of course, the co-founders' high energy and passion. They also have a backup and support for industry veterans as their advisors. And we have been really pleased to have seen how they have excelled over the last 12 weeks. We have introduced them to the international markets and also within domestic. Now it's my pleasure to introduce Saras Karai, co-founder and CEO of CoverForce.
Thank you, Anindya, and we want to thank Prudential, AIG, Chubb, Zurich, and USAA for their mentorship for this program. So good morning. My name is Saras Karai, and I'm the CEO and co-founder here at CoverForce. CoverForce was born out of the University of Pennsylvania's Innovation Fund, and it has the mission of strengthening the connection between insurance carriers and their most trusted distribution partners. That's agencies, brokers, and corporate affinity. We have a team with authentic capabilities and deep industry experience that includes the former global head of small middle market commercial at Travelers, as well as the former global head of operations, technology, and claims at The Hartford. A bit of background on the industry. So the current state is that insurance agencies and brokers are the main source of distribution. 85% of all business in the market comes from these two channels. It's a highly fragmented market on the demand side, as well as the supply side, with 40% of commercial lines premiums written by the top 10 carriers, with no carrier holding more than 5.5% of the market. PDFs and calls are still the prevalent form of communication, with getting a quote sometimes taking weeks. So therefore, speed has become the competitive edge for carriers alongside the quality of their offering. However, there is a lack of carrier access that hinders the speed. As mentioned on one side, you've got agents, brokers, networks, agency tools who really need this communication channel and demand digital communication solutions. On the side of carriers, carriers are aware and they're very proactive about providing these kind of endpoints to connect in. However, without industry standardization, agencies find it almost impossible to connect with these disparate API endpoints of multiple carriers, as well as accessibility in itself to get access to these APIs is often difficult. So introducing CoverForce. We are that bridge between the top-rated carriers as well as the most trusted distribution partners. We put on board a CoverForce engine service that maps between the different carriers and takes out a lot of the intricacies as well as the complexities of an integration. We package it into what is a consumable API, which then can either power what is the CoverForce agent portal, that is a front end that enables agents and brokers to access their carriers, or we have a willingness to work with agencies and brokers that have developed their own front ends that just need access to top-rated carriers. On top of this, we provide best practices in security and compliance that adhere to the global standards of these large insurance carriers, as well as their regulators. When it comes to the agent portal, me and my team, and this is pre-COVID, went out and surveyed hundreds of agents across America. We went everywhere from not just Philadelphia, but to Portland, to Chicago, to Florida, to really understand what are the problems in the industry. And we ended up working with some of the largest insurance networks that aggregate over $10 billion in premium to really understand what are their pain points and work with their agents to develop a solution that is built by agents for agents. It has instant quote pay bind, which in itself is a very difficult and revolutionary thing to have in the industry. But it's highly configurable, so agencies can select the preferred carriers and products. It lets agents be the broker of record, which is a very important differentiator in this market, as well as it adds a light touch CRM system and auto syncs with the existing ecosystem of an agency. So we fit in to the current solutions as opposed to disintermediate anything. All this is powered by a consumable API. It's a curated marketplace that enables agents and brokers to build their own digital experiences for their members and customers. You can offer a one-to-one relationship, or where a lot of carriers need to work with a certain agents group, we offer one-to-many. It is purpose-built to retain all the flexibilities intended by carriers, as well as updated continuously for their latest appetite guides direct from those carriers. Carriers ultimately control who gets access to them, as well as we use our team with top talent from industry to ensure a fast and light touch integration to ensure IT teams can very easily integrate with our ecosystem. So from the Financial Innovation Lab, a few points came out of where we feel like we add value and differentiate. From agencies as well as carriers, one of the core differentiators was the fact that we are the only independent technology enabler in the market with this solution. We're not an agent, we're not an MGA, and we are not a broker. And what that means is we are not a competitor. We do not compete with these agents, MGAs, or brokers, nor do we compete with the carriers themselves. We are there to just bridge between them. We are built to scale, as India mentioned, across lines, products, and geographies. We're powered by strong machine learning that enables accelerated carrier integrations and mapping. As well as from listening to our carriers and agencies, we ensure informed insights for development, giving insight into offerings, underwriting questions, appetites, as well as coverage gaps. Ultimately, our solution is just there to build that digital gap that exists between the most trusted agencies as well as the carriers which work with them. We're CoverForce. Thank you.
Morning, everyone. Thanks, everyone, for coming out today. It's great to see so many people here. I'm Adam Weiner. I'm the Vice President and Global Head of Business and Regulatory Change at AQR Capital Management. And I'm here to introduce Kevin Barrow from Mark Labs, who's the CEO and co-founder. Impact investing is a big growth area in investment management for both asset owners and for asset managers like ourselves. These days, you hear tons of communication around ESG values, corporate engagement, and stewardship. Really a much more proactive and engaged approach to looking at the companies that you commit capital to. Challenges are many with these approaches. Assessing corporate performance across the various environmental, social, and governance metrics can be tricky. You could buy data from a provider, but you don't necessarily know the provenance of that data. You don't know how often they update it, and you really can't be sure who's actually putting it together on their side. It also tends to be backward looking. It could be biased based on the inputs of the provider, and it lacks transparency. Corporate engagement and stewardship sounds like a better approach. You talk to the members, the people at the company, you get information directly from them as to what they might be doing, but that takes a lot of time, effort, energy. It's highly unstructured, and you can have problems kind of bringing that together. And so a solution could be a platform that aggregates and allows you to track that engagement data in one place, structured and standardized. And so in order to do that, I think Kevin has a solution. Kevin?
Hello, my name is Kevin Barrow, and I'm the CEO of Mark Labs. We entered into the FinTech Innovation Lab to test the hypothesis that by lowering the barriers of entry to strategic, informed, and explainable stewardship engagement, that would represent the missing link that would allow us to achieve the real-world goals and objectives of ESG investing. These are the goals and objectives that have mobilized over $40 trillion by impact-oriented asset owners. Speaking to the partners in the lab, as well as previous investors and clients, we discovered that the ecosystem is incredibly complex and confusing, and that the services and the tools that were out there were not fit for purpose for achieving ESG objectives and goals. And this is really a huge problem for portfolio managers who are being inundated by requests and asking, what are you actually doing with the funds that we have allocated to you? How are you actually achieving the outcomes that we have entrusted to you? This is where the Mark Labs platform comes in. We've created a database, a single repository for collecting all of your stewardship engagement data from across your organization and making it searchable, transparent, and effectively creating a baseline from which you can assess where you are and develop a strategy around how to proceed with your portfolio companies to actually driving the impact that your clients have paid you for. On top of this data, you're able to layer ESG data analytics, reporting frameworks, and compliance, all with the goal of being able to approach this much more quickly, much more effectively, and actually drive the outcomes. Part of our platform, which makes this possible, is modernizing the workflow. Today's stewardship engagement is largely manual. Information is stuck in emails, covered on phone calls, deep in Excel spreadsheets, or oftentimes merely in the minds of business analysts and portfolio managers. Our platform allows all that information to be held in a single place and for additional engagements to be driven in a manner which makes much less time than the current standard. Once an organization is able to bring all of its stewardship engagement to a single place, understand what's going on, develop and hone a strategy, and begin implementing it, that is when collaboration becomes possible. The ability to reach out to other portfolio managers and other business analysts that have that shared affinity group and share your power with them. Finally, there's the power of engagement analytics. Some of the organizations that we're working with have thousands of positions that need to be assessed for what types of engagements could be drawn. And engagement intelligence allows the individual material issues within those companies to be brought to their attention for further elaboration. Use cases which excited us that came out of the FinTech Innovation Lab were one in the insurance and being able to explore how the economic, social, and environmental determinants of health could be pursued through an investment platform, and then with asset management, how this could be much more of a strategic partnership between portfolio managers and their clients around ESG engagement. The database is clear. Being able to bring all of your information into one place has a value to clients. Collective action is also clear. Many of these challenges are way too large for any individual asset owner to undertake, and so being able to move collectively has its power. And then finally, the power of signal. The ability to take the information which is held in our platform and be able to have clear signals in terms of what organizations could be, a signal that could be an ingredient for a different way of underwriting insurance, for creating ETFs, and for driving index creation. We entered the platform, the FinTech Innovation Lab, having one anchor client. We now have 5 POC observers and a robust pipeline that we are looking to explore. My co-founder, Jen, and I have a profound experience in asset management and having worked for large institutions and driven capital, both domestically and internationally. And we have a strong team that we work with to bring this goal to life. Going into this, we wanted to refine our product roadmap. Along with the partners, we were able to do that. We wanted to develop a clear path to sustainability and scalability, and that was achieved. And we wanted to attract the resources and mentorship needed to execute our mission. More to follow on this later, as we were able to secure a lead investor and are in the process of closing our round. Finally, we wanted to develop a minimum viable community, and that was one of the most important goals and what we long to continue today. Thank you, and we look forward to communicating with you afterwards.
Good morning. Sustainability is at the core of Rabobank's strategy, so I'm thrilled to be matched up with Evercity. So between proposed regulatory changes regarding climate-related disclosures for public companies, governmental commitments to the Paris Agreement, shareholder demands, the need and the opportunity for the financial sector to show progress on climate-related ambitions comes from really multiple sources. So the critical factors in this journey are data transparency, measurability, and alignment on standards. And here's where Evercity comes in place. So they solve many of these challenges by providing their platform that streamlines green debt origination. So it's basically your one-stop shop for anything related to green loans, green bonds, carbon credits. So it's been a wonderful period working with the incredibly talented team of Evercity, and we hope to continue our dialogue after the program. So it's my absolute pleasure to introduce you today Alexei, co-founder and CEO of Evercity.
Thanks, Jennifer, and hello, everyone. My name is Alexei. I'm CEO and co-founder of Evercity. Climate change is a $1 trillion problem. And in order to solve it, most of the global debt will have to become sustainable by 2030. And last year, only 1.5% of the globally issued corporate debt was labeled sustainable. So that's a great opportunity. Green finance markets are booming, powered by the new regulations, net zero commitments, and changing investors' values. And currently, investors' appetites for sustainable assets largely outweigh supply. Where can it come from? SME sector can bring supply. But currently, SMEs have limited access to these instruments. And there are 3 reasons for that. First of all, sustainable finance is very complicated. And it's overloaded by methodologies, standards, and indicators. So that's why SMEs have to go to consultants to actually structure sustainable finance, and they pay them upfront lots of money. And finally, there are trust and greenwashing concerns. So Evercity is a SaaS platform streamlining green debt and carbon origination. We connect issuers, investors, and service providers within one user-friendly framework that helps to facilitate structuring and which creates network effects. By process and document automation, we make sustainable finance more accessible and affordable for the SMEs. And finally, by the integration of blockchain with monitoring tools, we increase data transparency at the asset level and avoid greenwashing. Our product matches 3 key parts of the green finance lifecycle. So the issuer starts with eligibility screening and creating the documents according to international standards that are integrated. Next, we are also helping with issuance. And finally, our ESG data map that integrates many data sources helps to automate monitoring and reporting. And the same workflow can be used by banks, underwriters, consultants to work with their clients. And for both of these two target groups, we make green finance origination faster, lower cost, and more transparent. Our key innovation is an open source blockchain protocol developed with methodological support of the UN, which helps to issue various sustainable finance instruments, which is a common good, and people around the globe are already starting to use it. We made significant progress in less than 1 year. We created the core part of the product. We started sales. We presented the product at the United Nations Climate Conference in Glasgow. And we are about to launch our carbon forward product. And the next year, we're going to issue our own protocol token. This could not have happened without my co-founder, Liza, with whom we have been working 10 years in sustainability industry and 5 years in climate tech, enabling the world's first carbon credit transaction on the blockchain. So join us at our booth and let's make sustainable finance more accessible to global SMEs. Thank you.
Good morning, everyone. I'm Helen Stanley, and I serve as the Chief of Staff to the head of the Aladdin Wealth Tech business at BlackRock. It was an absolute pleasure to be paired with Messari in this year's FinTech Innovation Lab. As digital assets become increasingly more relevant for investors and end clients alike, there's never been a greater need for institutional quality data, tools, and analysis in the market. Enter Messari. Messari provides crypto market intelligence and governance solutions, including in-depth data, aggregated insights to help investors better navigate the complex world of cryptocurrency. Their crypto market dashboard aggregates market data, key metrics, events, and market actions, as well as their proprietary market-leading research into an easy-access dashboard across protocols, different currencies, as well as DAOs. And this allows investors to act with better confidence and make more informed investment decisions. We and our other co-mentors were all extremely impressed with the quality of the team's research, as well as the sophistication of their underlying aggregation technology. It was an absolute pleasure to work with this team, and we think you'll also enjoy learning more about Messari's research and insights. It's my pleasure to introduce Messari's CEO and founder, Ryan Selkis, to share more about how Messari is bringing transparency to the crypto economy.
Oh, do you know the crypto guy, do you know the crypto guy? Why is he still here? This is the last one, so hopefully that woke everybody up a little bit. I want to thank Helen for that nice introduction, Maria, and the rest of the team here. It's been a great experience for us so far. Crypto is complex, and I know a lot of you at the institutional level are trying to get your hands around it. How can we support this? How can we invest in it? And we've solved two critical problems on both sides of the equation here. We've built data analytics and a market intelligence platform that helps people come up the learning curve, navigate this ecosystem. And on the other side, we work directly with these protocol communities to standardize the data that's coming out of their projects and ultimately create something analogous to Edgar for financial reporting for decentralized communities. I'm going to start with some numbers, just to give you a sense of scale and how well we've been performing as a company. Kind of speaks to the pain point in this market. We've grown to about 18 million in revenue on an annualized basis. Our headcount has grown 4x year over year. Gross margins are above 80% for this business. Net dollars retained up 6 times. So people like crypto, right? And we're just starting to get into the meat of the enterprise offering that we've been building for the last 4.5 years. Now, the bigger question is, what's going to happen next? And this is where my experience comes in. I've lived through a couple of these cycles now, been 9 years in the industry, was on the founding team at Digital Currency Group, which is a $10 billion investment manager focused on the space. Rebuilt CoinDesk in 2015, 2016 during one of the really deep winters. That's the largest media brand in the space. And that's really informed how we've built this business. All this has been done on zero net burn from our investors all time. So 3 things you got to ask yourself going forward, and I'm sure you're having these discussions internally. There's quarter-to-quarter pressures. are we going to really go all in on crypto when it's down 70% since we started the program? I don't think it was correlated, but we're talking about 3 key things that we look for in the market. The first one is what happens in each cycle with talent. We've seen tens of thousands of really high-quality professionals come in from Wall Street, from big tech over the course of the last couple of years. That's usually a one-way street for people that are coming into crypto. The market cap is down, but when we talk about tens of billions of dollars of capital, this is dry powder on balance sheets that's going to get deployed during the cycle for the next infrastructure phase. And if you look at the last couple of years, the innovations that we've seen in DeFi and NFTs and DAOs, they look like toys today, but these are all innovations that are not going to be uninvented. We're going to be able to build on this for the next few years, and the 5-10-year play is still intact. So the next thing you have to think about is, okay, what's going to be the stickiness of the customers right now? Who's actually going to be doing the building? And we don't focus on speculators at all, right? We think about 3 personas. 2 of these are going to look pretty familiar to people in this room. So Victor, the protocol specialist, Gary, the grower. Victor's the guy that's working with your compliance team to make sure that you can do deep asset diligence, monitor these protocols on an ongoing basis, never miss a really material update. Gary's probably in corp dev or investing, focused on thematic research and making sure that you're staying abreast of the key trends in the industry, seeing where the integration opportunities might be. And then on the other side of that equation, you've got Pam, the protocol leader. Her needs don't change just because the token is down 80%. Still got to communicate with her communities, which includes people like Victor and Gary. Still need to facilitate governance discussions and still need to grow and get to the next phase of growth in the cyclical market that we've been in. And so that's where we come in. We work with 600 companies, blue chip names in the industry on both sides of the equation here, the custodians, the wallets, the major funds, and the top protocols to standardize some of this information flow. And ultimately, we've positioned ourselves to capitalize on a network effect and flywheel that gets stronger with each incremental customer on both sides of the business. I think right now about 2% of our revenue is in traditional finance, so we expect many of the folks that trust us within the crypto industry to start migrating into FinTech, and we think that the financial services companies are going to look first to who the industry insiders trust, and that's Messari. Finally, as you're thinking about some of the things you're going to need to support these assets, we've got a highly differentiated offering. We're talking about things like risk questionnaires, corporate actions equivalents, 10 Qs, and kind of quarterly reporting frameworks that we've built from a bottoms-up basis. Standardized blockchain metrics and financial data from these entities, and then of course some research and analysis tools that you'd expect to see from a traditional platform like an S&P or a Bloomberg. So I encourage you to stop by the booth. We've got a few of the folks from the team here, and excited to tell you a little bit more. If you haven't met with us already, we'll give you a demo and try to demystify crypto a bit more. Thank you.
First, we'd like to say congratulations to the cohort for completing this very rigorous and time-intensive program. We're looking forward to engaging with you in further years as alumni. We'd also like to say thank you to all of our mentors from financial institutions and venture capital funds, as well as our executives in residence and entrepreneurs in residence. All in all, they've given over 500 hours of their time this year alone and have been crucial to the success of this program and our cohort. And lastly, thank you to Deutsche Bank for hosting us and all of you for being here this morning. We hope you've enjoyed the program so far and will enjoy the networking session we have after this.
Yasmin and I, as co-heads of the FinTech Innovation Lab, wanted to leave you with 3 points around how to further engage with the lab. So number one, FIs were not part of our ecosystem. As Maria mentioned, at some point, we started with 10 and have 40 plus financial services institutions. We are happy to grow our ecosystem, so please reach out to us if you're interested to partner and mentor. Secondly, some of the best startups that have come to the lab are through recommendations. We really appreciate your nominations. On our website, there's a nomination form. You can also reach out directly to Yasmin and I for nominations for the upcoming year. We'll open applications in October. Lastly, we have a robust alumni network between the New York chapter, London, and APAC. We have 250 plus fintechs, insurtechs, enterprise techs, and we're happy to make connections, so please reach out. All the alumni are listed on our website with really robust filtering capacity, and these are 85% of them are still in business, so it's a robust portfolio. With that, we'll welcome you to join us to the next room for the next 2 hours to network with the startups and everyone in the audience. And for the audience that is virtually joining us on the live stream demo day landing page, there's an explore section where you can download content regarding the startups and also request one-on-one meetings. Thank you again for everyone's time and participation. We look forward to the interactive section. And one quick plug as we head to the next room. You have security badges to exit the building. Please hold on to them. And with that, we'll end this section with a big round of applause for all the FIs, the cohort this year, the EIRs, Deutsche Bank for hosting us, and the whole team that brings this program together. Thank you.